Well, hi there, folks. We're back here, and our next presenter is Jeremy Newsom with Real Life Trading. Now, Jeremy graduated from the University of Florida, and he holds degrees in business management and mass communication. He is a full time trader and specializes on candlesticks, gaps, credits, day trading, and swing trading. Now, he rarely uses indicators when he trades, but if he does, he'll usually use something like the 10, 20, or 50 period exponential moving averages or the 100 or 200 simple moving averages. But essentially, he's got a very simplistic approach to how he looks at charting the markets. Now, Jeremy loves to teach and to entertain and to enrich people's lives. And with that, please join me in welcoming Jerry Newsom to the Trading Pub and his presentation today on two ways Dow Theory and gaps affect trading. Jeremy, the floor is now yours.
Mr. White, thank you so much for that pristine opening. I really appreciate that. That was a great bio. I was like, man, this is who is this guy? He sounds cool. It's just me. Ladies and gentlemen, I am here. Thank you so much for everyone who is here today and had the opportunity to share in just an exceptional roundtable of education from prior and upcoming educators. I know Melissa is coming up in the future from the Stocks Swoosh. Luis Gartner, this can be great. Maria is coming. Daniel Bustamante, Thomas. A lot of the people who were here earlier, I just want to say thank you for allowing me the opportunity. Again, Trading Pub, I really appreciate this. I'm all about educating, and I think we have an amazing core group of people right here who are excited about today. So we have Angie, my good friend Vinny Patel. George says hello. Caesar Jimenez is in the house. Bubba, Bruce, Brad, Bobby, Benny. A lot of you guys. Oh, fantastic. Well, feel free to use the chat pane. I do have the chat pane on another screen, so if you do write in, I am able to see it. Type in a 1 if you can hear me okay and see my screen okay. I just want to make sure that you guys can see everything. This is my first time ever using Omnovia, and I just want to make sure you guys all got me. Raymond gives me a 1. Beautiful. I like that. All right. Lavender Trader. That's a cool name. Beautiful. Well, what we're going to talk about today is two ways gaps and Dow theory can affect trading and specifically affect the stock market. I'm going to do a little bit of a different style of presentation. I know a lot of traders and educators like to use PowerPoint. I have worked on PowerPoint and Keynote for a while, but I'm going to do just purely chart analysis where we're going to be looking at the chart, and I'm going to do my best to educate with colors, with words, and of course question and answer session. So if you guys ever have any questions at any point in time, please let me know how I can help, and we'll talk about that. What I want to focus on today are gaps and how Dow theory applies and uses the overall human experience of trading to possibly help us generate profits from the stock market. So what I'm going to do is I'm going to pull up a company that we've all heard of, and that company is going to be McDonald's. And what I'm going to do is I'm going to zoom out here, and I'm going to go to a weekly chart pattern on McDonald's, and I'm going to do a line chart so that we can all just kind of see this McDonald's time frame. So we should be seeing 1991 to 2015 on McDonald's. Let me first just talk for a moment about what Dow theory is. Many of you, I'm sure, have heard of the Dow Jones Industrial Average. You guys ever want to know or wondered where the term Dow Jones came from? Well, it was Charles Dow, who was one of the business partners. His other business partner was Edward Jones. And Charles Dow is often referred to as the grandfather of technical analysis. He came up with 6 tenets of Dow theory. If you will, these 6 tenets are kind of like the main principles of what makes the stock market the stock market. So if you had to think about Isaac Newton is probably the grandfather of physics and gravity and propulsion and force. Charles Dow is likely the grandfather of human emotion as it relates to the stock market, because that's really what we're trading in the markets. Is we're trading emotions, because money makes people emotional. It could be a good thing, it could be a bad thing, but it's just simply a fact, right? If I came over to David's house in 3 weeks and just handed him $10,000, I guarantee he's going to have some type of emotion. Probably going to be a happy one. So money and emotions are very, very tied in, hand in hand. So Charles Dow came out with 6 principles or tenets of Dow theory, if you will. The number 1 tenet is price discounts everything, which simply is all about price action. This refers to price action. There are a few others. Volume needs to confirm the trend. There are 3 trends to every market. You have the minor, the intermediate, and the primary. A lot of you are very familiar with that term. The one and the tenet that I'm going to be working on today is the tenet that the market has. You guys ready for this? 3 phases. The market has 3 phases. And I'm going to write these phases into the chat pane for you. They are accumulation, public participation, I'm not a very good speller, and distribution. Accumulation, public participation, and distribution. Those are the 3 phases of the market. If I had to kind of wrap up what accumulation is one of those times where a lot of people are afraid. Okay? There's a lot of fear that goes in with accumulation. There's a lot of unknowns. There's a lot of uncertainty because accumulation happens during a low period of the market. It occurs when the market pulls back, when there is a rest, when the market is trading sideways, when there's not a lot of news or stories or articles about it. That's oftentimes an accumulation phase. Public participation phase is oftentimes when the news actually does catch on to the trade and there's a lot of hype. Right? Public participation, literally think about it. Public participation. So this is when your cousins or your friends from high school are coming up to you saying, hey, Andrew, did you see that crazy move on Under Armour the other day? Man, that thing's really moving. He's like, yeah. So they talk about this public participation phase because at this point, everyone's really excited about the overall move. So public participation is about the hype. That's where the money is often made, is in the public participation phase of the market. So you have accumulation, public participation, and then this one, distribution. Distribution phase is the boring phase of the market. That is when a stock will trade sideways. A lot of people and a lot of analysts refer to this as grinding market or a choppy market. Type in the number 2 if you've ever heard someone use the word choppy market. You had no idea what they were talking about. I used to hear that a long time ago. I was like, choppy market? What the heck does that mean? But it really just means boring. It means it's going sideways. There can be some action, but it's not overall massively exciting. So what I'm going to do for you now is kind of draw these 3 phases on McDonald's. And I'm going to start with 2003. So 2003, ladies and gentlemen, yes or no, was that a low point in McDonald's history? What do you guys think? Yes or no? I would say and argue, yep, that was pretty low, right? We had a lot of selling from $40 and it came all the way down to the low 10s, 10, 9, 8, 11, that type of price. So there was a lot of selling that occurred on McDonald's. So back in 2003, now obviously I know I'm using old data, all right? So let's just put an understanding on that. I'm fully aware. I'm just using this example to kind of help you understand what I'm talking about. And then when I start applying gaps to this and current information, my goal is to blow your mind. So the accumulation phase, right? That's when people are fearful. People are scared. There's no one really buying in that area. But the people who are buying are people who are buying low, selling high, and are anticipating and expecting potentially some losses to occur. But they know that they're getting the stock at a discount. So let's call it Warren Buffett or George Soros or whomever. So these people are buying for the 2 years that McDonald's is low. Then McDonald's has what people could refer to as an inverted head and shoulders pattern, breaks out and just starts running wild. What phase of the market do you guys think that would be called? Everyone is talking about it. Everyone's hyped up. It's all exciting. That would be the public participation phase of that trend. So there's your public participation phase. Very nice, Pierre. Awesome. So you have the accumulation, right, where we should be buying. That's what our goal is. I'll just go ahead and say that now. Our goal is to buy when we experience an accumulation phase. If we ever get one in the markets, we just kind of got one recently with that 20% drop in the overall markets. But we love to buy in accumulation phases. That's what smart investors do, right? Buy low, sell high. Before you ask, I will say a lot of you are going to think, hey, Jeremy, what sectors are in an accumulation phase? I think energies and metals. Maybe we can look at more of those later when I start throwing out some questions, but there are some sectors right now, in my opinion, that are in some accumulation phases. So, public participation. I mean, look at this. This is a weekly chart, so we're talking about some time here. So this is like 2005 to 2008, 9 really. So in 2008, 2009, McDonald's was one of the few stocks that did not get absolutely pummeled in 2008 because as the market went down drastically and people were losing their shirts in their investment portfolio, where do you think they went to go eat? Well, probably McDonald's because it's really not that expensive. So what ended up happening on the Dow Theory basis is this choppy, sideways, ugly market. That, my friends, is called a distribution phase. Distribution. And that's where the market calms down. That's where a lot of things trade sideways. That's where the smart traders who bought in the green area or the accumulation phase, that's where they begin to distribute their profitable shares to all the people who are buying there. So they're saying, who wants it? And they're giving it to them. So they're distributing their shares. This phase of the market is also referred to as a chart pattern called a channel. Have you guys ever heard that term before? A channel where a stock kind of bounces and trades sideways between support and resistance. Distribution phases often take on the looks of a channel, and they also are called a consolidation phase. Consolidation phase. So you take all three of those words, they all more or less mean the exact same thing. A channel is a consolidation period, and a consolidation period is just a distribution phase. That's what that is. So we're talking about a distribution phase. Here's what's interesting on McDonald's. Notice in about 2010 or so, McDonald's broke out of that distribution phase. What phase, my good friends and my traders from all around the world, do you think was and is, in my opinion, the next phase that began to take over? Pierre has got it again. He's on a roll. Yep, he says public participation. Yes, Marcia says public participation. Absolutely correct. So there's another public participation phase comes in. That's where people are buying. That's where money is hopping on. That's where the news is picking up. That's where you make your money. That's where you make some solid chunk of change. Distribution, especially for my longer term traders, is where you hold on to your shares, possibly do some covered calls, hold on to the shares, get some dividends, maybe invoke the collar strategy, or just prepare to be bored for like a 2-3 year action. So you get into a public participation phase, and boom, what happens for another 3 years? Distribution phase. McDonald's was in a distribution phase again since like 2012 to about 2015. And ladies and gentlemen, in my personal opinion, it appears that McDonald's, now this is not 2000, not 1997, not 2008. This is today, November 19th, 2015. What phase of the market does it appear that McDonald's is in? What do you guys think? A little bit of public participation phase, it looks like. Yeah. So you're probably thinking, Jeremy, it's really not that easy. And I would say, well, why not? If you got it correct back here and you got it correct back here, why can't it be that easy? I think it could. Matter of fact, I do think it is. So that's kind of my thoughts, first of all, on McDonald's. Now, a lot of traders will say from this point, Jeremy, how do you know when a stock has broken out of a distribution phase? Well, that comes and brings us into the title of the webinar for today. There are two ways: gap up or gap down. Gap action. That's what we're looking for. Gap up or gap down. Those are two ways that you'll know. So if I come in to a daily chart on McDonald's, here's the daily chart on Mickey D's. I'm going to pull up the candlestick chart, and we're going to kind of zoom in to the current price action. So again, this is really recent data. This is where we're going to start talking about gaps, and we're going to start talking again a little bit more about Dow Theory. And again, once I'm now zoomed in, I plan on blowing your mind a little bit more. So we're going to talk about gaps here for just a moment. Notice that this right here is a bona fide, credified, certified gap action. That is a gap. A gap is when a stock has a different opening price relative to the closing price of the prior day. So notice, if you will, that on October the 21st, 2015, McDonald's had a black candle. How are black candles formed? There was a dust bunny on my desk. I blew him away. How are black candles formed? Black candles are formed from selling. It could be people selling to lock in profits. It could be people selling to open. But you can rest assured that if the candle is bearish, so I know some of you use red candles, some of you use black candles. I personally use black. If the candle is black or bearish, you can guarantee that that candle was created from selling pressure. Simple as that. There was people who were selling. The market maker was driving the price lower to find buyers. Therefore, that is selling pressure. Let's say, for example, I'm going to pick on Vinny Patel. I don't know if this is the Vinny Patel that I know, but I'm going to pick on Vinny Patel regardless. So, Vinny, let's say that you were feeling really confident on McDonald's on that day, and you sold to open the stock, meaning you got into a brand new bearish position. You sold to open. How would you be feeling the next morning? Vinny said, I'd be hurting if I did that. Exactly. What we do, and when I analyze gaps, and again, Melissa is coming up in the next few sessions. She's another gap trader, and she'll be talking a little bit about this. I'm explaining the why behind the gap. See, a lot of traders will talk about, hey, there's a gap, let's just go bullish, but they don't necessarily explain the why. Well, that's what I'm here to do. I'm here to explain why is this gap a bullish gap. I can tell you that it is one, but why is it one? Well, because you had a lot of traders trapped from that black bearish candle, right? Bearish candles represent selling pressure. If someone goes in bearish, they sell to open. How do they exit their position, ladies and gentlemen? If a bearish trader sells to open on a stock, how do they exit their position? How does Vinny exit his position? Well, he has to buy to close or buy to cover. It's the same thing. So if someone is trapped on a trade and they have to buy to cover, do you think you could possibly be joining them in the purchasing of that security? What do you guys think? Yes or no? If you can look at this chart and say, man, people are trapped, people are losing money, I think I'm going to buy with them. I would say, yeah, absolutely. If they're trapped, they're buying to cover. You can guarantee that someone out there in the world is trapped because the candle was bearish. So someone had to create that candle. It wasn't just one person. It was obviously a few people. And this can be referred to, as Near says, a short squeeze. Yes, it can be called also a short squeeze, where there's a lot of short traders who get in, stock gaps up, and they're forced to buy to close. So if you combine the knowledge of what type of gap this is, are people trapped, and you take in a little bit of Dow Theory, and you recognize this was a 3-year distribution phase. McDonald's is gapping to an all-time high. People are trapped. Ladies and gentlemen, can we take that analysis and come up with the perspective of being bullish on McDonald's? Yes or no? And if you have no idea, just put in a question mark. But this is where I want everyone to type in. Try out that chat pane. Give me some yeses, give me some no's, give me a question mark if you just don't know, because this is a big deal. This is important. This is how we can make money trading, is when you start adding and building additional factors of, hey, is this something that we can take, we can trade? So I got a question mark. This is good. I'm going to give you some more examples. The trader says the name Ice. I like that. Iceman. Vanilla Ice. James says Yeppers. Yeah. So we're going to do a few more examples. But I will say, from this level at this point, that's the simplistic version of trading. And that's really how I trade. I go in to any stock, any chart that I'm looking at, and I ask some questions. And they usually start with why and who. Why is this stock gapping up? And who is losing money? So the whys can be usually pretty easy. Why is, well, it's gapping up because there's more buying pressure than selling pressure. Or they had good earnings or whatever. So it's gapping up. So that's the why. But then you can ask who. Who is buying here? Who is selling here? That type of thing. So you guys ready? Check this out. This is going to be fun. Remember how I talked about the three phases of the market just a few moments ago? Accumulation, public participation. Well, let me do them in the same colors. Accumulation. Oh, I did it a different color again. Let me try one more time. Accumulation, public participation, distribution. What? Yep, on a smaller term level, this still works. I think that's pretty great. Because what that helps me to know is this level, right? We shouldn't really break below that level. We shouldn't really break lower than 108 on McDonald's. If you knew or had an idea, or you could come up with some analysis that says, I don't think this stock should break below this certain price, is there strategies out there that you can benefit from that analysis? And I would say, yep, there's a lot of them, in fact. So let me just hop over really quick and show you some of my lines on McDonald's. Now, I'm not going to go into this particular strategy, but I'm just letting you know. This is a strategy that I wrote up for another company called Trader Planet. It was regarding a put sale. So this was actually a naked put. Near said you could do a bull put spread. Yep, you could do a bull put spread. You could do a put sale. You could buy shares. You could go long calls. I mean, as long as you're bullish, I think that's the right analysis on McDonald's. So you can go in to your Thanksgiving or your Christmas or your holiday endeavors with your family and say, hey, I met with this guy doing a webinar. He said McDonald's is bullish. You know, if someone asks you, hey, got any hot stock tips for me? Because that always happens at the holidays, right? The family get-togethers. If you guys are all traders, you know. You know the cousin that comes up, hey, Mr. Rich Pants, got any hot stock tips I can buy? At least I get that all the time. So anyway, this put sale was a trade that I considered, or I did the analysis for on the 6th of November, which was right there. So this is 74 cents. So I'm not saying that this is a robbing the bank type of trade, but if you were a trader and you did 10 contracts of that, that's $740 in about 2 weeks. And obviously, as you know, mostly, and I always will say this, if you do any naked put sales, you got to be okay owning the shares. What do you guys think? Would I be okay owning the shares on McDonald's at 108 after doing all the analysis that I did? I'd say yeah, absolutely. Sure. So I would have a cost basis of 107.26. That would be my new cost basis because I got 74 cents for the put sale. So if the stock came down, got put the stock, I did the analysis, public participation phase on a longer term level. Longer term, I'm expecting something like this to occur. So I wouldn't have an issue if I got put the stock, I'd own the shares, everything's good. So that's McDonald's. Let's do a few more examples. Let's hop over here to Home Depot and look at Home Depot, and let's just ask really quick questions. I'm going to go to a weekly chart for just a moment, and we'll practice this again on Home Depot, and you guys will get some of the gist of what I'm talking about. Here is the line. I'm going to hide all of my analysis here for just a second so it makes it a little bit easier to see. And ladies and gentlemen, what phase of the market was this right here on Home Depot? That is accumulation. Absolutely. Here's your public participation phase. Here's your distribution phase. And here is your public participation phase. Now, what if you said to me, Jeremy, there is no way in 2014 you would have known that Home Depot would have gone bullish? Well, I don't know about that. I don't know. I'm not entirely sure because we did actually go bullish on Home Depot in June of 2014. And here's why. Let me go over to a daily chart and we can look at current day Home Depot in just a moment. Don't worry. So here is Home Depot from a while ago. And what do you guys think? Do you see some similarities between this and McDonald's? Black candle. There's Vinny Patel right there, being bearish, coming into earnings, selling high. Stock gaps up. Ladies and gentlemen, are people trapped on that trade? Yes or no? Are bearish traders losing money on that trade? Yes or no? And the answer is yes to both those questions. So the stock gaps up. You use a little bit of Dow Theory saying, hey, man, we got a strong distribution phase. It's a long-term distribution phase. Nice black candle. Good gap. People are trapped. Go bullish. So you could have done long-term bull put spreads. You could have done put sales. You could have bought shares. You could have bought calls. Depends on what time frame you want to do it. But either way, Home Depot went bananas for the next few weeks. Now, or I said next few weeks, really for the next year. Now notice right now in Home Depot, we had a little bit of a distribution phase right here. It's a little bit smaller. It's not quite as long. But we can talk about this particular type of gap because really, this is the part 2. So here's your resistance. And let's just say you're like, all right, Jeremy, Mr. Smart Pants, this is a distribution phase on Home Depot. How come it didn't really run right there? And that's a very good question. And I will answer that question for you now. Notice the different color candle before the gap up. Ladies and gentlemen, is this candle before earnings bullish or bearish? I'll let you guys tell me. Cesar Jimenez, Charlie, what do you guys think? Al Davis, Pam, Rufus in the house. What's up, Rufus? Stefan, Tom Hall, Tracy Marin. What do you guys think? The candle before earnings, is it bullish or bearish? And in my opinion, I'd say bullish. I would say bullish. Why is it bullish? Because it's a white candle. Sure, it has a little bit of an upper shadow, but notice you got 1, 2, 3, 4, 5 white candles in a row. 5 white candles, aka 5 bullish candles in a row. What creates bullish candles? I would say buyers create bullish candles. If a candle is white or if a candle is bullish, it likely was created from someone buying that stock. So if you had 5 days in a row of buyers and then the stock gaps up the next day, how do you think they feel about that trade? What would you do? Or better yet, what would your friend Tom do? Tom is the guy who works with you. What would Tom do? If Tom bought Home Depot at 118 and then randomly the next day it gaps up to 122, Tom would sell. Pierre said, we'll take profit by selling. Near says, close the position. Exactly. So that, ladies and gentlemen, is what I call, very simply, a retest gap. White candle gapping up is a retest gap. Because you got people who are profitable, stock is gapping up, they're going to take the profit. That is them taking the profit. And then you get the bounce. You get to move higher. So let's look at present day Home Depot right now. Ladies and gentlemen, this exact moment in time, Home Depot is breaking out of an all-time high. All-time high. What type of gap is that right there? White candle gapping up. That is a retest gap. So if you said to me, Jeremy, Home Depot's at an all-time high. It's breaking out of a distribution phase. Dow Theory, I'm going bullish. I would say, well, you could, but I would wait a little bit because there's going to be some people selling. So if the stock did this, I would miss out on it, let the trade pull back, and then I'll get in. And then place my stop, place my entry, and all things are good. Now, can I take advantage of this particular gap? Because I do still think it's bullish. I do think some people are trapped. And I would answer by saying, yes, sure, you could do some put sales down here in the 120, 119 area. You could do some bull put spreads. Looks like there's some good wave rotation in here. But I'm not going to talk about Dow Theory. Elliott Wave. Here to talk about some Dow Theory. So that's what I got. Near says, better to buy the gap closer. Yeah, so exactly. If the stock retests, if we come down here and bounce, I think that would be a good buy on Home Depot. Let's think of some other stocks that could be breaking out of the distribution phase. Here is Pepsi. Let's go to a weekly chart on Pepsi, and let's look at this guy really quick. Here's the chart pattern. Ladies and gentlemen, type in, I'm going to give a different number. Type in a 7. I know you guys have been at the Trade-A-Thon all day. It's like a marathon of education, so you're a little bit tired. So I'm gonna wake you guys up. Type in a 7 if you can now look at Pepsi and see the Dow Theory phases at work. And as you guys type in your 7, I'll go ahead and draw some for you. Distribution, public participation, accumulation, public participation, distribution, public participation, distribution, public participation, and distribution again. And it appears that we're starting to break out of some distribution phase. So I can zoom back in here on Pepsi. And thanks for all the 7s, by the way. This is great. And let's come over here and let's check this out. And let's look at Pepsi. Here's the recent resistance. White candle gapping up to the resistance. It did not gap out of the distribution phase. Right? It did not gap out of the distribution phase. So that's why I was a little bit more patient on Pepsi. This is a retest gap. Here is the resistance. Stock trades into the resistance, breaks out of the resistance, and then retests, and then there's your buying candle on Monday. So here's my analysis on Pepsi, just so you guys don't think I'm just talking random stuff. Limit buy, so I wanted Pepsi to pull back. Buy. Protective put, so I don't get triggered or stopped out of the trade, because I think longer term, Pepsi is breaking out of a distribution phase and looks like it's going to continue a little bit higher, in my personal opinion. Ultimate targets on Pepsi are about 113.26 for me. Very cool stuff. Let's look at gold. I want to know where the gold's at. Show me the gold. Let's look at a weekly chart on gold and see if this same exact thing works in a different direction. Ladies and gentlemen, what phase of the market is that right there on GLD in your personal opinion? I want to know where the gold's at. Show me the gold. Show me the gold. That is a distribution phase on ticker symbol GLD. Distribution, right? Traded sideways, looked like a channel, like a consolidation. Here is your public participation phase right there. And then this distribution phase broke bearish. Here is your public participation phase going down. This right here on gold is actually an accumulation phase. And that accumulation phase did not break bullish. So what now, Jeremy? What happens if an accumulation phase breaks down bearish? What do you guys think? What happens if an accumulation phase, because accumulation phases can break in either direction, as you guys know. So George is correct. That accumulation phase will turn into a bearish public participation phase, more than likely, on gold. So I'm actually slightly bearish on gold. We have some trends and some angles coming in here. But if I come in here to a daily chart on ticker symbol GLD, right, this is a little arrow based on this support. And I said, I think gold bounces here or rests just a tad. Why do I say that? Distribution phase, public participation phase, accumulation phase. It's wild, I know, but this stuff works, man. Dow Theory is spot on. So this is an accumulation phase where we're likely going to trade sideways a little bit on gold. And from here, I'm going to see what direction it bounces. If it bounces or breaks out bearish, I'm going to look for gold to trade down to $97.56 on this particular ETF. which means gold, the actual physical metal, would likely trade a little bit lower as well. Let me try to think of another one. AMBA, I think, is a great example right now of what we have out here. So, you guys ready for this? Bum, 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 bum. I wish I had a good song. So, AMBA. Let's come out here to a weekly chart just so you guys can kind of get used to the view up here and just kind of talk a little bit about this trade. So AMBA, stock is moving bullish, right? Get a distribution phase right there, breakout, play participation, back to a distribution phase on AMBA. Now, AMBA in a distribution phase, right? There are two ways to know that a distribution phase can be breaking out. How do you know? Gap up or a gap down. Ladies and gentlemen, bearish gap right there. I like to call that bad boy a bearish retest gap. Bearish retest gap. And the reason I say that is because it's a black candle gapping down. So anyone who went bearish in this little general area right here, stock gapped down. Anyone who went bearish, how do bearish traders exit their position? They buy to cover or buy to close. There's the buying pressure, there's the retest, and this is the bearish public participation phase on ticker symbol AMBA. So we've had some bearish public participation phase on AMBA. We're coming back down to where we were. Ladies and gentlemen, what phase of the market do you think, I think, AMBA is in? I know I'm kind of giving it away with some of my analysis here on the chart, but what do you guys think? I'm thinking this is an accumulation phase. Just like this one back here. Type in an 8 if you feel like you just got a little bit of a light bulb coming on. You're like, this is some pretty cool stuff, this Dow Theory, right? No indicators. This has nothing to do with indicators. This is all pure and simple sentiment. What are people thinking? Why are they thinking it? And can we create a plan in the future based on what we think could or might happen, and then just simply follow that plan? So on AMBA, we're pulling into some support. You can see this is a limit buy setup. Limit buy meaning at the time I was waiting for a little bit of a pullback. Now we might be forming a double bottom, or really I think we're just probably going to do this for a while. But my stop is right here, 44.07. Because I could be wrong on AMBA. AMBA could go lower. It could, earnings is coming up in the near future, so I'll make sure I'm protected on that position over earnings with a collar strategy. But here's your little move, right? It could do this, or it could do this. But I will say everyone here knows and is very, very full aware of the risk to reward, right? That the importance of risk to reward in trading. So my risk is small and my potential reward is pretty big. Maybe it helps, maybe it doesn't. I'm not really entirely sure, but I guess we'll kind of see. Right? At this point, you just got to get into the trade, but this is a real life trade. Notice this little subliminal advertising. This is a real life trade. This is a real life setup, and it's one of those things I'm just kind of sitting here saying, I do not know what's going to happen, but we really never know what's going to happen in the stock market. The only thing that we can do as traders is come up with why we think something, create and write down the plan, and then just simply have the discipline to follow it. Because not only is that trading, that's really life. If you write down something, we should have the discipline to follow it. I know Marcia Toberman very well, and I appreciate her being here. She's probably a world-renowned cook or chef. If she writes down an ingredient list, she's probably going to have the discipline to follow it, because if she doesn't, she knows that it's not going to turn out as good. That's really all trading is, folks, in a nutshell. I mean, if I could boil trading down to like the most simplistic, basic elements that could possibly exist, I would say buy low, sell high, comma, create a trading plan, comma, follow it, comma, lose small, win big. And then that's it. It's really about it. What do you guys think? Do you think it would be cool if I could show you that I was calling the top on AMBA? I figure since we're here, I might as well show you guys some previous info. By the way, you can follow us on TradingView. It's entirely free. TradingView is a charting software. It's really people use it quite often, and if you get a chance to, it's just TradingView.com. Just a charting software that I use. But let me show you my AMBA charts, and I can show you a lot of other charts with Dow Theory and trade setup that we talked about could likely move. But let me just hop over to AMBA and see if this comes up. AMBA, beautiful. Ladies and gentlemen, 5 months ago on AMBA, I posted a chart that said, don't be that guy. Bearish, aka short. This was an AMBA, was at 122.23. So the chart's in the chat pane if you guys want to check it out. 122.23, and that's what happened. We got about $3-4 more higher, and then it tanked. How did I know? I didn't. But I can say that all stocks will have a distribution phase. Yes, that is correct. All stocks will have a distribution phase. So this is the day that I posted that chart right there. Next day we got that candle. And what do you guys think? When I saw that candle, do you think I was excited about a bearish trade? Yes, sir. Played that day, then we played this bullish, then we played some of that bearish. In fact, this is actually a note, I'm sorry this happened, 7/21/2015, which is right here. My guess at this point as AMBA trades a tad higher could bounce and then it gets into a big distribution phase. So there's the distribution phase on AMBA. Broke down, retested, continued lower. This Dow Theory stuff works, folks. So I'm going to go ahead and open the floor to some questions. We talked about a lot today. We talked about accumulation, public participation, distribution, bullish retest gaps, bearish retest gaps, and obviously the gap and go that we mentioned and we talked about on Home Depot from a while ago and McDonald's from pretty recently. What questions do you guys have? It can be a question about what we went over, or it could be just a general question about a specific stock or a sector, or really just about anything. And if not, I could probably go look at a few other sectors and see what they're doing. No? You guys good? All right, let's go look for a few other sectors then. Let's go check some of these out. Maybe look for some swing trades I'm looking at. USO. People like USO, United States Oil. So USO, down at these levels, I'm anticipating that this phase that we're getting right now is going to be pretty similar to the phase we had recently. So obviously, this is your bearish public participation phase. Here's your accumulation phase on USO. USO broke down bearish into another accumulation phase. So right now on USO, we really are at the level. We're at a very interesting buy low, sell high kind of price range where it's like, all right, are we going to bounce or are we going to go lower? And again, that's the beautiful part about this particular setup. I really do not know. I'm not really entirely sure. But we can always kind of zoom in here and create what I would refer to as a trading plan and just say, all right, our stop could go approximately here, 12.34, which is below that little support. Entry could go above that bullish candle, so about 13.48. You could obviously maybe tighten it up if the trade continues a little bit longer. So if we do something like this, right, maybe it bounces, goes bullish. But even that risk-reward setup there, which isn't the greatest, is still about a 1-2 on USO. What else? I'm sure there's some other stocks you guys want me to look at. And I'll kind of apply what we talked about today, gaps and a little bit of Dow Theory, to any individual stocks that you want me to look at. It can be a stock that you own, maybe a stock that you want to get into. Any stocks that you guys are looking at trading? Vinny says PAYC. PAYC. Paycom software. Paycom was dirty to me the other day. It wicked me out for a little bit of a loss. 1 hour loss on a swing trade. So let's talk about it. I can talk about that trade. I can talk about what we're looking at. Before I do, let me just go to a weekly chart really quick. Pull up the line pattern and ask a really quick question on Paycom. Obviously, it's a pretty new stock, so it hasn't had a distribution phase yet. Right? It hasn't had a distribution phase yet. Really, it's just kind of like, here's your accumulation, and here's some very, very choppy public participation phase. So we haven't had a distribution phase yet, which means it's coming at some point. So you can be slightly cautious on Paycom software. But if we look at this gap that occurred the other day did gap above the all-time high. What type of gap is this, ladies and gentlemen? This is the one that we talked about today. White candle gapping up. It's a bullish retest gap. Did the stock retest? Yes, it did. There's the retest right there. And we're currently retesting now. I think from the other day, it was a pretty bearish gap that occurred on the 13th of November. So I would say if we close above that particular price on Paycom, if we fill that gap, to me, the retest has happened, and I think we're going to go a little bit bullish. It's just kind of my thoughts on Paycom. Green Mountain Coffee Roasters, phenomenal gap today. Incredible. I'm really excited to see how Green Mountain Coffee Roasters plays out here recently. Let's come out over here to a weekly chart and look at Green Mountain on a weekly, because this is going to be exciting. Here's the weekly chart, and let's go through it. Accumulation phase, public participation, distribution, public participation, accumulation, public participation, distribution phase, bearish public participation, and right now we're getting into an accumulation phase on Green Mountain Coffee Roasters. So I know I went really fast, but I do these all the time, and I look at this all the time. Just something to kind of keep in mind. It's pretty cool. Here is the volume. This is, again, a weekly chart. And so I'm going to come back over here to the daily. And the daily chart, we got a really decent gap. Now notice we did have a very, very small white candle. The stock did gap up, so we're going to get a little bit of a retest on Green Mountain Coffee Roasters. But based on this gap, based on the fact that you had all of these people who did go bearish on Green Mountain Coffee Roasters and the stock gapped up, those people are trapped. A lot of volume came in today. A lot of buying came in on Green Mountain Coffee Roasters. So if I was to create a trading plan on Green Mountain, it would look a little bit like this. I would wait 2 or 3 days to trade sideways, probably do a limit buy around 46, a stop somewhere in the gap, and I would look to play Green Mountain Coffee Roasters bullish. That's just my thought on GMCR. In fact, whoever asked, I will copy and paste that chart. That's what I like about TradingView. You can get your very own link to this particular chart. Green Mountain Coffee Roasters. Boop, there you go. So you can save that chart, and you can kind of keep an eye on it if you want to. So that's Pierre. Vinny says, what's my favorite stock to trade? Apple. Trade Apple pretty much as often as I can. Salesforce today. I really like the Salesforce trade as well. So Salesforce, we had a good resistance. Again, let's just go out to a weekly chart really quick so you guys can see kind of my lines on this one. I'll do a line chart. And notice we had a little bit of a shorter term distribution phase right there. Also had a distribution phase right there. Broke out of the distribution phase, retested, bounced. I'm looking for a little bit of a pullback, a little bit of a bounce again on Salesforce. I'm bullish on Salesforce into about $86, $88 or so. This candle on the weekly chart, gorgeous, bullish engulfing candle. Very, very good volume. And we had a great gap today. Now notice we had a black candle and we gapped up. We did have some buying on this day and this day, so it didn't trap as many people as it could or might have. So on Salesforce, this is what I'm looking for on Salesforce. It could pull back a little bit farther, so I'm not going to be aggressive with Salesforce in my personal opinion, but that is kind of the rotation that I'm expecting, a little bit of a pullback, a little bit of selling overall on Salesforce. So Mr. Earl Jenkins, here you go, brother, CRM. You can have that chart. That's just kind of my analysis on it. It's in the chat pane. You can check it out. George says Twitter. Oh, you guys are starting to open up when we're looking at stocks. I like this. Twitter. Ladies and gentlemen, let's take a stab in the dark. Is it stab in the dark or shot in the dark? Shot in the dark. Stab in the dark. I don't know. What phase of the market do you think Twitter is in right now? George says accumulation. Angie says accumulation. Marcia says accumulation. Yep. That's what I think. Are people kind of fearful about Twitter right now? Yeah, people are a little fearful. Right? There's a lot of stuff out there about they're losing money and the CEOs, and people are kind of worried and it's breaking support. Now, I'll agree that fundamentally, Twitter's not the strongest company out there in the world. And I will also agree that it does have some lower highs coming in like this longer term. And it did break a very strong support at 29.51. And yes, I oftentimes am pretty bearish on Twitter. But I got to recognize the symbol and the signs that Twitter's a fun stock. I do think it's in a nice buy low, sell high territory. And as a matter of fact, I think some traders could have a pretty good risk reward setup on Twitter coming in right about now, actually. Got about 8 minutes for the market to close. One could do something to this extent, depending on how long term you want to be in Twitter. If it closes above 26.15 today, which it looks like it should, I'd be relatively bullish on Twitter. It made it back down to a relative support. It's in an accumulation phase. One could have a stop at 24.14. You could have a protective put trigger at that price and then put your stop way down here if you want to own it longer term. So you don't really care about swing trading it. You just care about if it does this, you want to stay in. Right? So you're not looking to go and grind and make some money on Twitter, but as a more of a longer term investment possibility. Because again, the stop that I'm using is actually below this candle right here. This really strong bullish candle with a nice long lower wick. So that's what we got. Very fun. All right. Beautiful. I love it. I love it. I love it. If you guys like this kind of analysis or the ability to request stocks, Real Life Trading does have a swing trading room. If you are at all interested, it is in the afternoon from 5 to 6 Eastern Standard Time, Monday through Friday. So if you're saying, Jeremy, there's 5 o'clock Eastern's coming up pretty soon. Yes, that is correct. So in an hour and 7 minutes, myself and a lot of the other traders who are here today, actually right now, will be joining us in the afternoon swing trading room. It is a $99 a month subscription service. And I do track all of the swing trades that we get into. So here is a tracking sheet of those swing trades in case you guys want to know what it looks like. We do track it in an Excel document, and we do a request type of trading room. So I go into the day asking, hey, what do you guys want to look at? I write them down, and we go look at those stocks and go see if there's any trade setup. So it's really very applicable to each and every one of what you guys are looking at. Now, that's the afternoon session. Again, a $99 value for an afternoon trading room is incredible. You don't have to be there live. We do record it, and we do send it out every single day around 7:30 Eastern. So if you have a full-time job, if you're a swing trader, if you're interested in getting analysis day by day on stocks that you care about, that you are likely in or want to be in, I would really check out that price. Now, one last thing. If you just love trading and want to be in as much as possible, we do right now have an incredible value of $149 for both the day trading room and the swing trading room. So check that out if you're excited. I just posted that link. Should be in your chat pane. Happy to give you that special for both, for this webinar only. Make sure to sign up. If you can sign up, preferably before 5 o'clock Eastern. If you want to be in the afternoon swing trading room, just make sure you're in there, and I think it'd be great. So just throwing that out there. If you guys like this kind of analysis, we look at it every day, Monday through Friday, and every trader that you interact with at Real Life Trading, it is our mission to make sure every trader and each trader is in fact a person who trades with real money. Just as an additional bonus, if you guys do sign up for the afternoon swing trading room, that's really one of our more popular products, and it might suit a lot of you who are here today. Again, that's only $99. That link is in the chat pane. Whoever does purchase from this particular webinar, again, thanks to TradingPub for allowing real life trading to do this, we will be offering, and me personally will be offering, a free coaching phone call or session for anyone who does sign up using that particular link. So make sure to sign up. You can see the promo code is in there for the coaching session, and pretty excited about that. So just letting you guys know, it's going to be great. ICE, he said TWOU. So this is kind of the feel for the afternoon swing trading room, right? People come in, they say, hey, what's this particular stock doing? And we look at it and we give triggers. Distribution phase, public participation, possible accumulation phase on TWOU. Volume is a tad light, but I do like the fact it's making a higher low. I'd probably go with something like a stop below the recent pivot, 2065, and a close above this particular price as well, 2013. It says a link does not work. Link doesn't work. It might be, you have to open up in another chat pane. Give me 1 second to try. I appreciate you guys clicking on it. Oh, it's through Omnovia. It's an Omnovia thing. Okay. Well, here's what we'll do. I'm confident that Yana will be able to take care of everything. We'll email you guys the link and a copy of the recording. I think it's a pop-up issue with Omnovia. She might be able to help me out with that potentially. Let me minimize this. But yes. Earl says, do you have more trading like webinars? I'm going to go ahead and let Mr. Raleigh White or Yana take over. I'm pretty much soaked up my time. But yes, you can find us at on YouTube. You can type in real life trading. You can find us on YouTube. We do webinars. I do free real life stock reviews every Monday, Wednesday, Friday, all that kind of good stuff. So it's great. Raleigh, Yana, you guys got anything else for me? I appreciate every one of you guys being here, by the way. Thanks so much for your interest. And I don't know why that link isn't working. It works on my end. If you copy and paste it into a browser, that link will work. I'll put it to you that way. So if you copy and paste it and put it into another browser, it will work. All right. Beautiful. Well, ladies and gentlemen,
great. And
I'm out. Thanks, Raleigh. What
thank
you
you,
got
Jeremy,
for me, man?
for that terrific and highly entertaining presentation on how you use Dow Theory to clearly identify accumulation, public participation in the distribution phases in the market, and how this can be simply applied virtually on any market. I also appreciated how you took questions from the audience and bounced from stock to stock and allowed us to easily see what phase the markets are in. So I know from my perspective, I really do appreciate how clear-cut and simplistic your charts are and how helpful this process is. I also want to thank you for the special offer that you've extended to our members for the swing trading afternoon room that you have 5 days a week. And I understand that special price is $99 a month, or for an additional $50 a month, so for $149 a month, people can not only be in your swing trading room in the afternoon, but they can also join your morning day trading live trading room. And in both cases, this includes a free personal coaching session as a bonus for people that sign up. So once again, thank you for your time today, the incredible information, the straightforward approach that you have for trading, and the special offer that you have provided to us. I also want to remind everyone that today's sessions are being recorded, and we will send everyone that registered a link to this recording no later than tomorrow afternoon. And also, really, any issues that you've had with this link to Jeremy's special offer, that's easily resolvable, as he said, by copying and pasting that link into your browser. And we'll also make sure that in the follow-up email that you get from us tomorrow, we are going to email you those links as well. So you'll have everything, no worries whatsoever. So I do see that we have our next